Hey traders, Cousin Vinny coming to you from theclosingprint.com on August the 9th with a video covering all of the indices. Naturally looked at the Russell 2000, which is weaker than most. Broke down prior to the S&P 500 and the NASDAQ, retested this trend line and failed. And now we see a bearish cross on the indices. My thinking goes something like this. If the market does move higher this week, if we do see a bounce where the Russell starts to outperform the S&P 500, perhaps we break this trend line and we can make a trade on some of the components. So I went a step further, started looking at the daily chart, and we can see that we had a move off of this lower Bollinger Band. RSI is a breaking trend. It looks like it wants to move higher. Stochastics has already turned, and MACD looks like it wants to continue as well. Now, there was some talk about Vladimir Putin de-escalating the crisis in Ukraine. I caught that late in the day on Friday, and I thought, okay, let me start positioning for a move. So I got a position in AVTIX. I'll show you that. Hold on a second. Let's go down to funds. I looked at RUI, which I liked that doji that we saw on the weekly. But the fund that I was looking at was the ABFIX, which is the American Beacon Small Cap. I was noticing that after this wedge breakout and failure that we're starting to see a bounce, similar to what we're seeing. Obviously, it's benchmarked to the Russell. And now we have a MACD cross. So the cash position I took and rolled into AVFIX looks pretty good. You can see Mikey and I've been talking this morning. Looks good. So what I'm anticipating is a move back to this. You see the moving averages here, back into this zone between the two moving averages. It may get rejected there, and we might see another descending pattern here. So I'm anticipating that bounce and what happens if we move through that. So following that train of thought, I started looking at the Russell and the components to determine what stocks were trading the best on the current pullback in the Russell 1000, the RUI. Now the Russell 1000 is the largest 1000 stocks in the Russell 3000. Those stocks comprise 92% of the entire index and have the best forecasted growth values. So I wanted to look at those stocks and take a look at what might be setting up for the week ahead. So I just wanted to see how these were performing over the last couple of weeks with the S&P 500 down. Now, Apple moved a little bit lower, but it is holding the 50-period moving average. The RSI is flat. Stochastics is recycling. So Apple could be a decent mover this week if we see continued upside. Berkshire Hathaway making 52-week highs. You can see Stochastics led, MACD's turning, and there's decent volume there. Chevron, a move off the lower Bollinger Band and this Kirby level. RSI is turning, RSI turning up, and MACD's turning as well. So you can start to see the pattern here. A move off the lower Bollinger Band, we moved outside. That's a buy signal to some traders that like to use that style. We have the 200-period moving average here. GE is probably going to retest that and the 20 and 50 period moving averages, as well as this Kirby. So we keep an eye on that. GLNG, obviously in the liquid natural gas sector, doing quite well, holding and closing at the 20-period moving average. The 10-period is just above, as well as this Kirby level that we could move back above. Stochastics is turning, so we could see this recycling to the upside. IGT, you're starting to see a pattern here. Johnson & Johnson, Staples, move outside the lower Bollinger Band. We're starting to squeeze a little bit here, but we're right at this Kirby level. So we could see further upside on Johnson & Johnson, with stochastics leading MACD, RSI starting to climb. Obviously, it's better to buy a stock after it's pulled back than it is to chase it higher. MCRS, I don't know if this was a buyout candidate, what the news is here. We had a nice gap up there. Microsoft pulling back to the 50, nice long-legged doji there, and we're well above the Kirby, looking very strong with the 200 period moving average moving higher as well. Nice candidate if you like to trade long-term and like the dividends. Stochastics leading MACD, PG looking really good. Stochastics leading as well. PL, same gap up, probably a buyout or some other news. Solar City, no doubt, off of earnings, didn't look so great this on Friday, but it did hold the 20 period, and the 15 to 200 are down below. Pretty big selling volume. Splunk, a little weaker than the rest. Tahoe Resources, moving higher. Note the squeezing Bollinger Bands and the Kirby. Twitter, I like the social stocks that are continuing to move higher, like Facebook and LinkedIn and so forth. So this one looks really good. Came down to the 10 periods, holding that. It's consolidating above this Kirby level. I think this one's going to move higher. Vertex Pharmaceuticals holding the 50 period moving average. Lower Bollinger Band, RSI is turning, as well as stochastics and MACD. So this could possibly work back up to this Kirby level, but note the green part of this. Fewer sellers than there are people that bought. Still, there's overhead supply at 95. So that's a good 10 points away, 8 points. And Wells Fargo, big cap banks, looking good. Williams holding the 50 period, nice candle on Friday, with stochastics leading and MACD starting to turn, as well as RSI pushing back up. So we could see a move higher on Williams, maybe take out this level at 59.68, signaling a move higher and a continuation. Now this is all contingent upon the markets doing well, of course, but that's what we're looking at. So then I looked at the DMARC 9. If you don't understand DMARC, you can always go to my site. I have a section under strategies right here. Just click on DMARC, and that gives you an explanation of DMARC indicators and why I use trading the nines as an indicator. Now the nice thing about this is that sequential 9 will pick up on trends that are continuing higher. So while the markets were moving lower, a lot of these stocks had shown tremendous relative strength. So they would have been candidates to trade going into last week. All right, Enbridge Holdings, Family Dollar, nice gap up, move sideways. Looks like it's going to be a gap and go with that whole buyout news by Dollar Tree, I believe. Home Capital, market was moving lower. This one just could care less. Nice volume. We're looking for a pullback now, but you can see if you'd been looking for a pullback here, you wouldn't have got it, as we were trading outside the Bollinger Bands for the entire week. Horizon Bank Corp, we got trend lines here, possible break to the upside, nice volume. Hydrogenics, moving higher above this Kirby level, could see a move up to this level here before it meets any meaningful supply overhead. Maybe this level here as well at 30, 31. Kaiser Aluminum, this one looks nice. Starting to flag out here. Stochastics is bouncing. Got, it's low volume, not that liquid. Still, it's an interesting trade. Look at Alcoa and the other aluminum providers. Kohl's, of all the retailers, this one is starting to look really good with earnings on Target, Walmart, and some of the other big boxes not looking that great. There is value in Kohl's. You can see the breakout of trend here, a nice downtrend, higher low, Bollinger Bands expanding, looking really good. Also check out Costco. Manning and Napier, now I don't know what this company does, but looking interesting. Marathon Petroleum, this one was on our Bollinger Band scan for 2 weeks. This one just continues to move higher. We got it here in the Bollinger Band squeeze, and then it just took off and ran 6-7 points depending on when you got in. And now we have this Kirby level to deal with. We could see a flag here, or if it pushes through, this thing could take off. I would tend to think it's going to rest a little bit because we have moved off of this low and ran 10, 12 points higher. So I would expect to see a rest, but note the volume. Somebody bought these shares looking for continuation. Mercury General, again, Bollinger Band squeeze. This one showed up a while back. I think I deleted it from the scan only because I was disinterested. It took too long to do anything, but it just showed that the scan does pick up good candidates and eventually they do break out. I tend to like the stocks that break out after being inside the Bollinger Band squeeze for a shorter period of time. Still, they had relative strength relative to the markets last week. Metro, Toronto Exchange, Movado Group, looking good. Takes out this high at 43.83. We could see a move higher up to this 48.04 level. Looks like that might be in the cards. Stochastics looks like it's trying to get down. I'd rather see it recycle, but this looks good. Take out this high and we could see a 5-point run to this high, perhaps. Put that on a short list. Nordion. Nice pattern, this stock. Squeeze, pop, squeeze, pop, squeeze, pop. And here we go again. NVE, and this was a really nice one. Bollinger Band squeeze, got above the Kirby level. You can see what happens when a stock gets above the Kirby. There's no resistive volume, no supply, overhead supply to resist the move higher. I would expect that this is going to flag out soon though, after a move off of 52. And our last group, Perry Ellis, a wicked candle on Friday. Interesting clothier. RCPT, Receptos, trying to take out that level here. This one showed up on the high type flag scan, although it technically isn't a high type flag. The high type flag scan catches stocks that increase in value rapidly within a short period of time, like 30 days. So we saw that. We came back down to the 50 period, and the 200. We bounced, and now we're moving higher. We take out 45.29. This one could be on the move again. Tecmira Pharmaceuticals. This one took off, flagged out last week. We saw this one on the Toronto Exchange and didn't do anything with it, but hopefully some of our Canadian friends did. Above the 1664 level, it's just a goner. And looking at 34.66 in the cards, perhaps a flag here at this Kirby level and then a move later. So that could be a continuation. I don't know if this trades also on the New York Stock Exchange. You can check that out as well. WestJet Airlines, Toronto. Also keep an eye on Canadian Airways. That one looks good, I believe, or had at one point. JetBlue took off last week, no pun intended. Whistler Blackcomb Holdings, if you're a skier, you know this one. Off the 50 period moving average. Again, all these stocks that are moving higher relative to the S&P 500 just continue to look good. Thinly traded, so keep that in mind. Started looking at some scans. These are the scans that I've written over the last couple of years. You can see the Bollinger Band scan here, high type flag. I have one for the pennies. But down here, I just wrote one today that is very interesting in that if you look at the scan, there's stocks that are moving sharply higher on large volume. Okay, and I have these noted out so that they don't run. Stocks that are moving higher on larger volume after moving sideways, that's a base, like a rectangle. Stocks moving sharply higher after short-term downtrend, that's like a descending wedge, descending channel. So if you look at the pattern prior to the pullback, if it's an uptrend, you would expect a little short downtrend and then a resumption or continuation move. And then I looked at stocks moving sharply higher after a long downtrend. And I ran this scan. I changed the close to being greater than 1 because there was few candidates, and I ran it, and this is what happened. This is interesting. I got these 8 stocks. But what really got my attention was when I charted this particular name, QTWO. And you see the highs here. All right, let's mark this up. It may not make a whole lot of sense, the progression, but in my mind it does. So I'm looking at this pattern. Okay. And what I thought was, okay, we have a nice triangle pattern. We had a downtrend. We have Bollinger Bands squeezing. We have, let's change this so I can get rid of this volume so I can show you something. Let's change this to 3 months. Actually, let's change this to 4 months so we can get rid of that volume spike so you can see the volume. All right, so I see this volume here and I'm thinking, wow, wouldn't that be great if we looked at this early in the morning with a 30-minute. Let me save this. So what I looked at was the 30-minute. Okay, let me change that to fill the chart. Now, this is what I saw. And if you follow me at all, you know the opening range is what I like to wait for in the morning to get a bias on the markets. Let's take a look. I think I saved this chart. 30-minute. Yeah, here we go. The 30-minute. I already marked this up. So there you go. There's your 30-minute opening range. Now, 1,000 shares in this particular stock. Using this scan early in the morning, when you see volume greater than the average volume, gives you a decided edge on other traders who haven't seen this particular position yet. You take 1,000 shares here, it costs you $13,000, and by the end of the day, you're up a point and a half, 2 points. So you walk away with $2,000. You take the rest of the day off, or the rest of the week, depending on how you trade. So I thought that was pretty interesting in that we stumbled upon a scan that you'd think that we had picked up on much earlier, being that we trade the opening range, but it never occurred to me until an epiphany like this that perhaps this would be a nice edge that we could have as traders. So if you follow me, that's great. You know what my Twitter handle is on the stream and also on StockTwits. I'm Cousin Vinny, coming to you with a quick look at the way I think on a Saturday, speaking with Mikey and going through scans and thinking about things. All right? So I hope this helps. Take care, and we'll talk to you later.